Good morning, everyone, and welcome to our weekly webinar, Virtual Roundtable. We're so glad that you could be here again this week. We are going to be discussing kind of phase 2 of the PPP and looking at FAQ 31 as well, and answering questions that you guys have regarding the CARES Act and PPP. My name is Jody Skanesny. I'm the Vice President of Member Engagement with the MICPA, and again, really glad that you could be here joining us today. A little bit of housekeeping before I introduce today's panelists. If you've participated with us in the past, you know how this works. We have muted your microphones, and we're going to ask when time comes for question and answers that you just type your question into the chat feature and I will read it to the panelists. So if you're unfamiliar with how to do that, just kind of move your mouse and you'll see the toolbar at the bottom of your screen where it says chat. You can just type your question there, and we'll make sure that we can answer as many as time will allow in our 1 hour together today. So to keep things moving right along, I'm going to introduce today's panelists. We're really pleased that we have some folks who are willing and able and experts in this area, although they will tell you that there are still a lot of changes happening and still a lot of gray areas with the PPP. But hopefully we can get you guys some answers today. First, we have Rich Buslip, and Rich is both a CPA and an attorney. He's with Kerr Russell Attorneys and Counselors based out of Detroit. His area of practice includes automotive, business and corporate law, China and US businesses, mergers and acquisitions, private equity, among other things. He has more than 28 years as business counsels to clients in a wide range of industries. We're really happy to have Rich here. And in addition, he is also an MICPA member. And then we also have Alex Morris, who is the Advocacy Manager for the Michigan Bankers Association. Alex has been there just a little over a year and a half, and prior to that, he was a Legislative Assistant for the Michigan House of Representatives. So now I am going to turn things over to Rich.
Well, thank you, Jody. I appreciate that. I think, just maybe a little background and the impetus for FAQ 31 would be helpful to the members. Obviously the Paycheck Protection Loan Program was implemented by Congress at really breakneck speed, and the thought process and kind of the purpose of and objectives of the program were to really provide loans to small business, eligible small businesses, and which if they were used in the appropriate way and to fund the necessary payroll over an eight-week period, would eventually turn into, or would turn into the borrowers, for the borrowers, forgivable loans. And so that the whole idea and concept and objective of Congress was to fund the payroll costs of small businesses, and also allow them to use a portion of the proceeds for rent or mortgage and utility costs. And so in adopting that law and approving that law, there was a number of essentially exceptions made to what are called the affiliation rules for certain categories of business, essentially in the hotel and food industry. And as a result of that, that would allow certain businesses that probably wouldn't otherwise have fell within the requirements of a small business, at least for this program. The typical small business would have to be less than 500 employees, or meet certain requirements for either net income or sales. And so it would have been possible because of this exception for the affiliation rules for hotel and certain restaurants and food industry, for even public companies or very large companies to avail themselves of this PPP loan. And as a result of that, that did happen. There were a number of companies that did receive funding, and that created a huge backlash. There was a tremendous amount of negative press, and the Treasury Secretary and certain senators said, "Well, wait a minute, that was not what was intended." And as a result, I think pressure was put on the SBA to come out with some additional guidance. And so that's really, in my opinion, what was the impetus for FAQ 31. And when you look at the actual question of FAQ 31, which is, do businesses owned by large companies with adequate sources of liquidity to support the business's ongoing operations qualify for a PPP loan? And so the interesting thing about that question is, unlike, and that came out in April 23rd. So just last week, they finally published that question and the response. And unlike the 40 or 50 other FAQs that the SBA has issued with respect to the PPP loan program, a number of them are yes or no type questions, and the SBA has responded with a yes or no answer. For this particular yes or no question, the response is not a yes or no answer, and so it still leaves it leaves a tremendous amount of ambiguity and vagueness as to, well, are they eligible or aren't they? And so, at the end of the day, we can walk through the answer and provide guidance. But I think the best advice that I can give as a lawyer is, it's going to come down to, for anybody that's applying for a PPP loan, I think there's a certification process, and you need to be able to certify that in good faith certification that based upon the uncertainty of the current economic conditions, resulting from COVID-19, a loan is necessary to support the operations of your business. And so I think probably one of the best things that anybody can do as part of this process for applying is to do the analysis and do the the necessary work to support whether or not the certification that you're making is true. And I think for most businesses that are less than 500 employees, or that otherwise meet the requirements for the PPP loan, I think the certification, is going to be, you're going to be able to demonstrate that, yes, we've got, there's certainly uncertainty with our business because of COVID-19, and a loan is necessary for us to fund operations. So that's kind of just the background of it. Alex, I don't know if you have any additional insight or any additional information that you think is necessary to add at this point.
Yeah, thanks, Rich. I don't know that there's any additional information other than, I concur with just about everything you said there, and I would point to the certification as well that Rich alluded to on the borrower application form. I think part of the SBA's impetus here with FAQ 31 was to clarify what they believe through conversations with members of Congress was the intent of the legislation. And as Rich said, as the program rolled out in the first couple of weeks, there was a good amount of feedback from a number of members of Congress who believed that the program is not being used in the way that Congress intended. And so they spoke with SBA, and as part of that, I think that was also part of the feedback that you see here. And so this clarification, I believe, is SBA's interpretation through conversations with Congress of their intent of the CARES Act.
Makes sense. I think, one thing that the FAQ 31 does provide guidance on and does address is with regard to, one of the things that they did provide an example of, which is, in the case of a public company, the SBA does indicate that they feel that if there is a public company that has a substantial market value and access to capital markets, the SBA at least has indicated that they would feel that it would be difficult for that public company to make the certification, and as such, they would expect that any public company that does have substantial market value and access to the capital markets would be expected to demonstrate to the SBA upon request that what's the basis for their certification. And so I think that's, to me, is good information, and I think that could be used by any borrower under the program as good advice, which was, as part of your application, do your due diligence and and document contemporaneously with your application the information that you have that supports your certification.
Sorry, Jody, if I can just give a little color to that too, Rich, I appreciate that. And from the banking perspective for the folks on the call, your clients, I think it's important also to pay attention to that last paragraph. As many of you know, and as I spoke about a couple of weeks ago when I was with you, the incredible volume that banks were dealing with in these PPP loans. And so it was very necessary for the banks to be able to rely on some of those certifications to move forward with the process and get the money into the hands of your clients and those small businesses who really needed it. But I say that and draw your attention to it to recognize that that impetus will fall on your clients to make that determination. And with with the clarity, I say clarity in air quotes, that FAQ 31 provides, I just think that that's something that your clients should certainly be very aware of and should be part of the decision-making process there, because that lender is not going to review whether or not this business actually does not have access to other liquidity.
Agreed.
We do have a couple of questions coming in on chat, and I've also received some in advance via email. Let's start with the ones on chat right now. This is from Richard. Rick David. What are borrowers doing about the newly issued IRS Notice 2020-32 regarding the deductibility for federal income tax purposes for certain otherwise deductible expenses when a PPP loan is forgiven?
So I'm not aware of kind of any what borrowers are doing in that, or taxpayers would be doing relative to that. That's not something that I've seen yet.
Yeah, me neither. I've not seen that that guidance, and the most I can say about the federal tax piece is, that was kind of not very clear on the front end. So the IRS and Treasury has tried to partner with SBA to clarify some of the pieces that may be relevant to them. So I'd have to look into that to get an answer, but I'm certain that was the impetus for the IRS releasing that guidance.
From Dan, do we have to calculate each week's FTEs during the 8-week loan period and then take an average of the 8 weeks, or if any week during the 8-week periods equal or exceeds the look back period average FTEs, then are you not penalized?
Would that be on the front end or the back end? I guess we can't.
Yeah.
It would be, so from my understanding, in terms of calculating the loan and what that loan would be, that 8-week period, you're gonna take an average of the 8-week period. If he's talking about forgiveness,
He's thinking back end. Yep, he just clarified.
Okay. So if we're talking forgiveness in terms of the 8-week period, and I want to make sure I'm answering this correctly, with FTEs, I don't know that the FTEs are going to make a lot of difference as long as that business is maintaining the same number of FTEs that they had previously. That is pretty clear that they do have to maintain through that 8-week period. The more important part, I think, in terms of forgiveness is the expenditure and the 75% threshold that has to be met on payroll cost expenditure in that 8-week period. So documenting the actual expenditure, I think, is going to be more what you're looking for on the forgiveness part. So I hope that answered that question. I wasn't 100% clear on where they were going with that.
From Robert, regarding the ability for a borrower to have the PPP loan forgiven, the business must pay compensation to employees, and the employee's compensation must not be decreased by more than 25%. Can an employer pay more than the average compensation into an employee, and then will such amounts qualify as a, quote, payroll cost?
So yeah, it's a little unclear if he's saying that can you give somebody an increase in pay?
Mm-hmm.
Not sure about that. I think, a couple of thoughts. Number one, and it hasn't been touched on or talked about, but I have seen guidance or recommendations that you actually to be safe, setting up a separate bank account for the loan proceeds, just from the standpoint of being able to track the use of the funds. So that's one point. In theory, it shouldn't be required or necessary, but it's probably good practice if you can do that, to isolate those loan proceeds into a separate bank account, just for purposes of tracking the use of the funds. So as to the question, I think he's saying, so can you, to the extent you use the proceeds, the loan proceeds, to fund payroll, and a particular employee is paid more than what their compensation otherwise would be, does that count towards the loan forgiveness? I don't know the answer to that. I think it's a question of comparing prior compensation, and I don't know that you would get credit for paying anything more than what their existing compensation would be. That's my thought on that. I don't know the answer for that to be absolutely sure.
Yeah, Rich, I agree that there isn't a 100% clear answer to that, although I can share that with our national trade, the American Bankers Association, in their conversations that they've had with SBA and with the members of Congress, it has been made very clear that the intent of this program is to keep payroll going. So right. if payroll is, so if you've met that 75%, or in order to meet the 75%, you would need to offer bonuses or run payroll early or increase compensation. The SBA has not made this clear in writing, so I want to say that before I say this. but our guidance has been that that is a better function, and the SBA is going to look at that as more in line with the program than if you were to keep everybody's compensation, employees' compensation the same, and then spend loan proceeds on other things that don't qualify as payroll. So I guess just in understanding, as Rich said, that this is not clear and the SBA has not been 100% on this, I think you're much safer increasing employees' compensation and increasing the percentage of the loan proceeds spent on payroll than you are doing it a different way.
From Daniel, what sort of documentation will be required on the forgiveness side?
Okay. So obviously, the more the better. And there's different buckets or categories of expenses. From the payroll standpoint, I can imagine, obviously, records of employees in terms of having worked and payroll hours, the normal payroll records that you would have, and then all of the documentation evidencing the payment of compensation, which would be your the bank canceled checks or bank statements, or the payroll records that you have that evidence payment of payroll. So that's kind of one bucket. The second bucket would be you are allowed to use a portion of the loan for rent or mortgage payments, and the same thing, you would lease agreements showing the monthly rent, as well as evidence that the payments went to the landlord. The same thing with respect to utility payments, the amount of the monthly utilities during the 8-week period, and evidence that the payments were made to those utilities. I think those are the sorts of things that you're going to be needing to document that the loan proceeds were used for the necessary expenditures. And the final thing would be, obviously, there's limitations on the breakdown of 75% for payroll and no more than 25% for rent and utilities. So you'd want to be careful that you're in line with those parameters.
Yeah, two things to add there, Rich, is I appreciate your comment on the 75%. I think we had a question in the chat that I saw pop up here asking if they could spend more. And I would just reiterate that we believe this program was designed to
Absolutely.
spend 100% of the proceeds on payroll.
Yep. And I agree with that. I think you can go higher, and you won't have any trouble. I think if you go lower, then you run the risk of a portion of that, the portion that you're using on non-payroll not causing you to lose the forgiveness.
Roxanne had asked a question kind of along the same vein. She'd sent this one over via email, asking any more information on how related party rent will be handled.
That's an excellent question. I think, just thinking from the standpoint of, I think, to my knowledge, there isn't any guidance that says it's not, it won't be allowed, that you can't use, that you're not allowed to pay rent even though it's paid to a related party. I think to the extent that it's fair market value rent, and I think it should be allowed as long as it doesn't exceed 25% of the total expenditures, or 25% compared to the payroll, as long as it's fair market value. I think when you start, if the rent were to get higher than that, higher than fair market value, there could be issues with it being allowed.
And on that forgiveness piece for both of those questions, I think Rich covered basically everything you would need documentation wise that we think you will need. But SBA will be issuing forgiveness guidance that our assumption and our understanding is it will guide both lenders and borrowers through the forgiveness process. So hopefully when that guidance comes, you'll have a list of exactly which documentation you need.
Michael asks, if an owner of a PC is collecting unemployment and receives a PPP loan, can they continue collecting unemployment and stop once they are able to open their business?
They can, but that 8-week period starts immediately upon disbursement of the loan. And that 8-week period is what determines what is forgivable on the loan. So I guess my answer is you can, but I don't know that I would recommend it.
Yep, I agree.
From Jeff, can a company spend 85% for payroll costs and 15% for their expenses and have the loan be forgiven still?
Yeah, absolutely. You can spend more than the 75% with the caveat that the forgiveness amount, we understand that you will likely have to put an amount in that you are applying for forgiveness. And so if you've hit that 85-15 with total loan proceeds, there shouldn't be any reason the entire loan is not forgiven. There will be people who don't necessarily meet the 75% of the total loan proceeds expenditure on payroll costs. And those folks can still apply for forgiveness. They would just have to apply for a lower amount so that the expenditure that they did do on payroll costs is 75% of the number that they apply for forgiveness for.
And the interesting thing, so you can borrow up to 2.5 times your, in theory, 2.5 times your monthly payroll. I'm not, I wonder how you get to, if you're, how you get to more than a certain percentage when you're at 2.5. If you borrow the full amount that you're allotted, it doesn't, to me, the math doesn't work out where you'll end up, a 1-for-1 where you couldn't use 100% of that for payroll in theory because you're only allowed, you can borrow up to 2.5 times. So there's going to be excess funds available for rent or mortgage payments or utilities.
Michael shared some information on the chat about Notice 2020-32. If anybody wants to kind of review that, it is there in the chat. A question from Stephen. If a client obtained an increase in their credit line and then received a PPP loan, would they need to consider paying it back? The company is not very liquid, revenue is down 50%, and they are in the process of rehiring their employees.
So, well, that kind of goes to the question of FAQ 31 to a certain extent, which is, do you need to take into consideration, your alternate, financing sources or existing financing sources when you certify and obtain the, the loan. The whole point of the Payroll Protection Loan Program was to provide small businesses with funding to maintain payroll and maintain employment while for an 8-week period, a short duration period. If they can certify in good faith that they based upon the economic, conditions from the COVID-19, funding is necessary to maintain operations. I think subsequent events, in my view, there's nothing in the statute or in the FAQs which would say, all right, if you subsequently are provided with financing that it would somehow cause you not to be able to, use the loan, or that the loan would no longer be forgiven. That's my understanding. And I think the SBA would have a very difficult um, uh, position. That's a very difficult position for the SBA to come back after the fact and say, we said you would be able to use these proceeds and they would be forgiven if you used them for payroll, and we're going to change the position on that, and it's no longer forgiven because of financing that you were able to obtain. That is not that's not what's been provided for in the law anyways.
Yeah, I agree, and I think FAQ 31 was really not designed to address something like that, where look, this program is designed really to be forgivable. The intention is for it to be a grant to the business, so long as it is used correctly. And so opening up availability of a line of credit, while that does give the business some access to capital, I don't believe that that's the intent of what the SBA is reaching for here with FAQ 31. They're really looking to cover the businesses that are multi-billion-dollar, multi-state businesses, but they have, many locations, like a Ruth Chris Steakhouse or something like that. I don't think that you're going to have issues on the back end with the SBA saying, well, wait a minute, there was credit available for this business. I don't know that they're even going to have the time to look that closely with the amount of loans that they have. So I agree, Rich.
Yep.
Patricia has an interesting question. If a company has a history of giving an annual bonus in May and gives a bonus this year during the 8-week measurement period, is the bonus includable in the forgiveness computation? The prior year bonus would have been included in the loan amount computation. Thoughts on that?
Yeah.
I think, as Rich said previously, it's not 100% clear, but this being a payroll protection program, compensating your employees or using more of the proceeds for payroll, even if it comes in the form of a bonus, through every conversation we've had with SBA, there's going to be some leniency in looking at that. You cannot decrease the pay of your employees, but I think increasing it, whether it's increasing their hourly, their salary, or via a bonus, is something that will likely be allowed.
Yeah, I would agree. And I think it's, particularly if it's consistent with, historical, with historically has been done, and in line with what has historically been done. It's compensation, and it doesn't say, that you can't provide bonuses. The laws, there's nothing in there that precludes that. It's part of the compensation process, and I would say if it's consistent with past practice and in line with past practice, it would be allowed.
Great. Tamara asks, if the first quarter wages are higher than wages were in 2019, for example, employees that only work during tax season, do you have to pay them 75% of first quarter wages when the loan is based on 2019 wages? 75% of first quarter wages is more than the monthly average payroll for 2019. Does that make sense?
She kind of lost me on that. Maybe if you, I'm not
So
quite sure I understand.
Yeah, I think she's saying that the PPP loan proceeds are not going to cover the first quarter payroll costs in that 8-week period, because the loan computation was made on lower wages at the end of 19, and they pay higher wages in the first quarter of 20.
Okay.
So I think that's what she's saying. And if that's the case, then I think ultimately what you end up doing is that business spends 100% on payroll costs, which is absolutely fine.
Yep.
That was
I would
kind
agree.
of how I was interpreting the question too. From Daniel, when calculating the wage reduction limitation that Robert Curtis mentioned, what employees will be included in the calculation? Only employees who are on the payroll during the 8-week forgiveness period, all employees from Q1 of 2020, employees on payroll after 2/15/20. go back and refer to this. Calculating the wage reduction limitation.
Yeah, I think I'm lost on that one now, Rich.
Yeah, I'm not sure on that.
And so he's referring back to a previous question from Robert regarding and the question was regarding the ability for a borrower to have the PPP loan forgiven. The business must pay compensation to employees and not the employee compensation must not be decreased more than 25%. Can employer pay more? So that was Robert's original question. And so when we go back and we're looking at the question at hand, when calculating the wage reduction limitation that Robert mentioned, what employees will be included in the calculation? Only the employees who are on the payroll during the 8-week forgiveness period, or all employees during Q1 of 2020, employees on payroll after 2/15/20.
Okay. Yeah, I'm not sure on that, to be honest with you. I know there is there's a period, there is a requisite period of time that you need to look at in terms of calculating the the employees and the who's on your payroll. Off the top of my head, I don't recall that period though. I don't know, Alex, if you know that off the top of your head either.
I don't know, and I'm not sure that there has been 100% clear guidance on that either. I don't know the answer to that off the top of my head. Sorry.
Okay. Another question from Robert. Any thoughts from the speakers on using the PPP loan proceeds in the case of a business that's shut down because of the stay-at-home order? If no one can work or telework, the business would generally not have employees nor payroll as all employees were furloughed. And we've gotten this question a couple of times about businesses being shut down.
Sure. Well, so obviously to the extent it's you receive the loan and it's not used for payroll, it's not going to be forgiven, but there is still a benefit to the loan. It's a low interest loan with favorable repayment terms. So to that extent, it would be beneficial.
It's also part of the intent of this program, just through conversation with congressional members, at least in the Michigan delegation, is to have folks on the payroll instead of on unemployment. So whether they're working or not, the business can pay them. I certainly understand that that is not, that's not your typical business strategy to pay people to sit at home. But that is, I think we can say pretty safely, was part of the intent of the program. So if the business chooses to do that because they want the forgiveness piece on the back end, I would say make sure they fall into that 25%. Don't go below the 25% reduction in wages, and make sure the 75% is spent on payroll. And then you do have the other 25% of the loan proceeds to be used for other business expenses.
Mm-hmm.
Yep,
A follow-up question to that too. Roxanne had emailed over, because Michigan has stay home and stay safe extended. Will the MICPA seek a change of the start of the measurement date for loan forgiveness, or an extension of the 8 weeks from loan date? There are clients that did get the loan, but they can't open up. Roxanne, I did reach out to our government relations department for an answer on that, and was told we're working on getting the 8 weeks extended to take into account the extended shutdown period. It's not the case yet, but it is something that is on our radar. So please know that we're working on it.
And the MBA is working on that as well. That is one of our advocacy efforts from the lender portion as well. I know that benefits both the lender and the borrower. I don't know how successful those efforts are going to be, just to be completely honest with everybody on the call. It's better to prepare than to not, but the efforts are being undertaken.
Well, then we'll we'll just both keep working on it together there, Alex. From Maria, what are some of the factors you think should be considered for the needs analysis? I have clients that are not large SEC clients, but are concerned. For instance, it was mentioned that small non-public companies should be fine, but I have a client who does a lot of internet work and no drop in revenue, and employees are able to work still, already working remotely and getting paid the same wages. So today they seem unaffected, but not sure how business will be affected in the future if some of their clients fail. Do they
Sure.
need certification?
Well, I think, yeah, and I think that's a great question. So I think there's a number of things you would look at that to maybe demonstrate the need. Number one, you'd maybe look at, and it's all, a lot of it is projecting out, but you're doing an assessment or analysis of uh, customer payments and what your expectation is relative to either slow down or slow pay in receipts. Because that would have a significant factor on significant impact on your needs for funding. Also, I think to the extent you have suppliers and that could be an impact in whether the suppliers are able to continue supplying your business. So you may be able to work from home, but to the extent you have supply needs in connection with that, if you're not able to have your suppliers support you, that could have an impact. I think you also look at to the extent you do have existing financing and whether or not that financing will be impacted, whether you will be able to remain in covenant with your loans and continue to borrow funds necessary to fund the operations would be an important question to answer. I don't know, Alex, if there's anything off the top of your head, whether you could think of in terms of the needs analysis.
Yeah, Rich, I think just based on this program, I think one thing, and I really appreciate this question because it's good to bring this up. One thing that I think we, as a business community and both from the lender and borrower perspective, have kind of lost sight of is that this PPP program is not the only program that Congress has enacted designed to help business. It is the most immediate, and for a business that has not had drop in revenue, I think you're going to have a really hard time proving a need for the PPP program because it's designed for the disbursement to begin and for you to begin spending those funds. The intent of the program, from as far as we understand, was for businesses who are going to close and never reopen because they, in the next 2 months, cannot cover their expenses in many circumstances. For a business that has not lost revenue, while there certainly is economic impact, I think that economic impact is farther down the road. And there are other capital access avenues that may be used when those issues come up. I don't know if the PPP program is necessarily the appropriate program for that scenario.
Okay. So Michael, I think looking for a little more clarification. So if I understand, if you own the PC and you're collecting unemployment and you receive the PPP loan, you can continue collecting the unemployment. Assuming you can't open your business for the 8 weeks, why would you want to use the loan proceeds and not get any benefit? You'd be better off with the 1% loan. So this is kind of going back to what you had said, Alex, about the intent, I believe, of the program really being to limit the number of people drawing on unemployment, correct?
Yeah, definitely. And I understand why there is some business logic that doesn't necessarily make sense there, but I'll throw this number out there just to kind of reiterate the point I just made. There are 30 million small businesses in the US, and so far with a over $600 billion being put into this program, only 2.5 million businesses have gotten loans. This program's not designed for every small business in the country to get a PPP loan.
Makes
So there are
sense.
scenarios where it's not necessarily intended.
Dan asks, if an employee was on the payroll during the first quarter but quit before the PPP loan was obtained, and the company hired a new employee for this position, will the new employee's wages count towards the 75% required compensation for the original employee?
I believe they will. Yeah, I think there's it doesn't track specific employees, but head count and payroll.
Yeah, I agree.
Igor writes, if a bonus is paid quarterly, but the next payout will be right after the 8-week period, can a portion of the bonus, equaling accrued portion for the 8 weeks, be included in the forgiveness? You guys have some very specific questions today.
Yeah. Frankly, we have given the guidance to our members to move your payroll, to advise their clients to move payroll up. You have to remember that you're still dealing with the SBA. It's still a federal government agency. This is a program that the federal government put money into it that it doesn't have. And the SBA is known more as in my personal opinion, punitive to the business community in certain circumstances like these. This really sets up to be a dangerous scenario for businesses on the back end. So that would be my only caution.
Maria asks, what about funding 401k matches or other employer retirement contributions that would normally be paid around now? And does that answer change if it would normally be funded in, say, August or September?
I'm not sure on that one, to be honest with you, Jody.
Okay, that's fine. Linda asks, if an employer contributes to a cash balance or retirement plan designed to maximize contribution to shareholders and owners, and a shareholder/owner receives a large contribution, such as $150,000, can employer use this entire amount to be included in the payroll retirement costs to obtain loan, and will 8/52 of it qualify for forgiveness? It's another question on retirements.
Yes.
To be completely honest with you, that is such a specific scenario that I don't know the answer. And again, the caution would apply. I think these are some things that are kind of moving pieces around that maybe distort the intention of the program. And I think that's going to be a problem on the back end for forgiveness. Or I should say it could be a problem on the back end for forgiveness.
Elizabeth asks, regarding FAQ 31, should we be drafting a document contemporaneously identifying the reasons a business feels that they face economic uncertainty at this time?
Yes, I agree 100% with that. I think to support your certification, I think to the extent you have an analysis or documentation in place at the time that demonstrates what your good faith belief is, why you're going to have uncertain economic conditions resulting from COVID-19, loss of customers, stay-at-home order, slowdown in receipts. To the extent you can demonstrate all of that, should the SBA at a later date, challenge the certification, you'll have at least your thought process and analysis. And I think that's, you've met the requirements.
Good. From Dennis, and this one is probably a question for you, Alex. I was told by our banker that many banks did not want to process these loans for a few reasons. One reason was that the PPP loans would have to be included in the bank's loan to deposit ratios. Do you know if this has been changed by the government?
So that was absolutely a concern on the front end of this program. And again, with a wonderful federal government agency like that, they did not provide clarity at first. The state DIFS, Department of Insurance and Financial Services, also weighed in on that. And from my understanding at this point, we have clarified, I think to the best extent that we're going to get, that it does not count to their loan deposit ratio. Again, there are banks across the state who did 200% of their annual lending capacity in 14 days. So to count it against the loan deposit ratio just didn't make any sense. There absolutely was hesitation on the front end because it wasn't clear. We believe we have gotten that clarification and that it will not count. Also, I'll say every bank in this state participated in the PPP program. Many of them had to, or I should say every member of the MBA participated. As far as we're aware, many of them, especially some of the bigger banks, did have to stop taking loans because the volume was so great that it was going to be impossible for them to complete the program and continue to take them. Many of the community banks have stepped up and they have partnered with the big banks to take those businesses and work with them. So I think we've gotten to the point now where everybody has access and every bank, at least in this state that is a member of ours, is doing these loans.
Great. Jeff asks, how is the $100,000 per employee compensation computed for forgiveness? So $100,000 divided by 52 weeks times 8, or divided by 12 months times 2. Different answers with different results. What method is correct? Any insight on that?
You got a direct phone line to the SBA, I would call them. Yeah, I'm not sure on the, that's pretty specific. I've never looked at that exact issue.
I think that will be clarified by the SBA and the guidance that we continue to be told is coming, but it's not here yet. If any of you are monitoring the program's guidance, which I'm sure most of you are, treasury.gov's main homepage, you click on the red banner at the top for COVID-19 resources. That is where they're adding all the additional guidance as it comes. There were 3 interim final rules put there just this week. So we hope to see guidance on that as early as middle of the week next week. And hopefully that is one of the questions that they answer.
Jerry asks, well, at the time of the application, the owner truthfully certified then current economic uncertainty made the loan request necessary. With hindsight being 2020, collections for unknown reasons increased dramatically, so perhaps they did not need the loan, which in fact was received. Will there be ramifications from that?
Yeah, you know, I think the certification is at the time you make it, and subsequent events, you know, somebody can always, and hindsight is always 2020 and can always point to it. But I think at the end of the day, if at the time you're making the certification, you have a good faith belief based upon the economic conditions and the uncertainty that you need the loan, that's all that's required.
I agree. And I think if you get in a situation where the SBA is arguing with you about that, you can kind of use their own words against them. FAQ number 17 in the SBA FAQs clearly states that the information available at the time, the guidance that was available at the time, is what will be applied to each loan. So if, you know, it was before April 23rd when FAQ 31 came out, I don't see how you would have an issue on that.
Wendy asks, how will salaries exceeding $100,000 be considered in the forgiveness portion of the loan? Will additional calculations be required to apply only a portion of these employees, or will maintaining all employee pay at least 75% be sufficient?
My understanding, it's only up to $100,000. So that's if you have employees in excess of that, that excess compensation is not counted.
Agreed.
Okay. I know I jumped around a little bit here. I'm trying to go back and see because we have just a couple of minutes if there's anything that wasn't touched on at all. Maria says the PPP forgiven funds to not get picked up in taxable income, and per the IRS new notice, taxpayers can't deduct costs paid by forgiven PPP funds. So no double dipping and zero tax result ramification. No net income, no net loss. But what about sole proprietors? They were allowed a portion of their self-employment tax to be paid to them via forgiven PPP funds.
Wow.
Yeah, I'm not sure.
I've not got that question. Actually, Jody, if you don't mind sending that over to me on the back end when we're done here, I would love to run that up the flagpole. It's a good question, and it's something that probably SBA is going to have to clarify in writing. And we're trying to get as much info to them now before they issue the guidance so that it is complete on the front end instead of having to go back and ask for more. So that's a good piece to include.
Yeah, absolutely. I will send that over. And if you do get any response on it and you want to send it back, we can push it back out to this group because we've collected everyone's email address. So happy to send that. Patsy asks, please address if PPP loan forgiveness is for payroll paid in the 8 weeks or the pay period earned for that 8 weeks. Does that make sense? Please address it. Okay.
Yeah, I think it's, I understand the question. It's because there's, people are often paid, work for a period of time and receive their pay subsequent to that. I believe it's the pay, it's what's paid during that 8-week period on a cash basis, essentially, not looking beyond that point in time.
Agreed, which is why we have suggested potentially moving the last payroll towards the end of that 8-week period up if need be.
Yep.
Good advice. All right. Well, we are getting to the end of our time here. And again, I'm just kind of trying to make sure that if there's anything that wasn't touched on, I know a lot of these are kind of similar. Some of the questions were similar to other questions. I want to make sure if there's anything specific that we weren't able to get to, that we've touched on most of them. Looks like we have covered, at least on a peripheral kind of view, everything that was thrown out there. One more from George. In regards to your last response, has that 8-week window for payroll been clarified in SBA guidance?
Yes, it begins on the first day of the first distribution of the loan.
Very good. Okay. Well, I want to thank our panelists today, Rich and Alex. Our members, of course, they had some great questions today.
Absolutely.
I feel like you guys feel like you were in the spotlight being asked some real specific, real tough questions, and your guidance was very much appreciated. Lots of thank yous coming across on the chat right now. So we definitely appreciate your time. Next week, we're going to be doing another roundtable discussion. It'll be happening on Thursday. We're going to have some members from Deloitte and also from Manor Casterison talking about from a business and industry side, your remote finance team, how to get through that month-end close, also looking at quarterly reporting and reporting into the future. What do you report on COVID? Ways that you can advise your clients who may be going through that. Also, just some general tips on managing your teams remotely, best practices for how to manage your team in this new environment, and what may turn into potentially in the future kind of a blended environment of some people being in the office and away from the office. So another great discussion next week. It'll be at noon on Thursday, so we hope that you will all be able to join us then. Stay tuned to our weekly e-news for more information on that. And Alex, I will get that question over to you, and if you can look into it and get the answer back to us, we'd appreciate it.
Do our best.
Again, thanks to our panelists. Thanks to all of you for being here. As always, if you have questions or concerns, if there's anything that the MICPA can do to help, we're just a phone call or a quick chat away. Have a great afternoon, everyone. I hope you get to enjoy the sunshine. Take care.
Thanks, Jody.
Here, Alex.